Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. The WeWork India IPO sees a tepid response on the first day. The co-working space provider also faces a legal hurdle. Two investors moved Bombay High Court alleging inadequate disclosures.
Together Fund has launched Swarm Space, a new platform aimed at supporting early-stage AI startups with founders connected to India. Select startups will get access to funding of up to $1 million, technical mentorship and resources to help them build and scale their products in India and international markets.
Quick commerce unicorn Zepto is gearing up to raise $450 million in fresh funding round, led by U.S. pension fund CalPERS at a valuation of $7 billion. According to a report by Money Control, the fundraise will also see participation from existing investors, including Lightspeed, Nexus Venture Partners, General Catalyst, Avra, and Stepstone.
ChatGPT maker OpenAI is now the most valuable private company in the world. Employees sell shares worth over $6 billion at a valuation of $500 billion. Elon Musk, SpaceX, and China's ByteDance are valued around $400 billion.
DoorDash has finalized its acquisition of the UK food delivery company Deliveroo. The boards of both companies approved a nearly $4 billion deal. The buyout will help DoorDash to expand its business in Europe, Asia, and the Middle East.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Ahmedabad-based Ignosis, a financial data intelligence platform, has raised $4 million in a pre-Series A round led by Peak 15 Surge, with backing from Razorpay Ventures, Force Ventures, and Kunal Shawkred, among other existing investors. Founded in 2022, Ignosis has already partnered with over 125 financial institutions working to bridge the gap for millions of underserved Indians and MSMEs who struggle to access credit, insurance, and wealth services. To understand how Ignosis is transforming financial data into actionable intelligence, I'm now joined by its co-founder and CEO, Nirav Prajapati. Nirav, welcome to Startup Street. India has seen rapid digitization, yet 160 million Indians remain credit underserved, and 80% of MSMEs still struggle to access formal credit. Nirav, tell us, how is Ignosis bridging this gap where traditional banking has struggled?
Thanks, Shruti, for having me on the show. Ignosis is a 3.5-year-old company based out of Ahmedabad, building for BFSI and building and solving for 300 million underserved Indians for access to credit, investment, and insurance. We operate in a financial data intelligence space, and we are building on top of DPI, the latest DPI called Account Aggregator. Account Aggregator is an RBI-backed ecosystem that enables seamless, secure, consented data sharing, and that basically enables lenders, wealth managers to get the real-time information of the customer, like the financial data profile of the customer. And through Ignosis AI-driven intelligence, we basically enrich the information with cash flow-related data, obligation data, fraud, risk signals. Okay. That's really driving the overall penetration of AI and the intelligence, enabling different use cases for BFSI.
Okay. Nirav, picking up from what you just said, Account Aggregator is at the heart of your proposition. You've said Account Aggregator can become as fundamental to financial data as UPI is to payments. So tell us, what does that future look like, and how is Ignosis accelerating it?
Future is extremely bright. Just to give you more context, there are over 2.2 billion accounts that are available on AI ecosystem that can be linked, and the data can be shared in near real time. So far, over 250 million consents have been fulfilled through Account Aggregator. This year alone, almost 1.6 lakh crore loans have been dispersed through Account Aggregator. So the AI ecosystem is expanding, and we are at the forefront of that expansion, enabling BFSI with the pipes that requires a secure, consented data sharing and the intelligence that helps take the decision for the customers.
Sure. And, beyond Account Aggregator rails, AI-driven analytics is another core pillar for you. Tell us, how are you helping BFSI players move beyond legacy bank statement analysis into this new era of financial data intelligence?
Sure. So there are two areas of focus here. Traditionally, the data was shared through PDF files and a lot of alternate ways of sharing, which was like fraud prone. A lot of document fudging was happening. User would have to share a username, password for that net banking, and the data would be scraped and then underwritten further. So through account aggregator, we are eliminating most of these processes and making it extremely secured and consent-driven data sharing. And part of
Okay.
that, the additional intelligence is on top is identifying accurate income for self-employed, their business income, their business
Sure.
expenses, enabling gig workers because their cash flow patterns are very unpredictable. So identifying accurate income and obligations for gig workers, and that is really driving the financial inclusion
Okay.
with various type of financial products.
Sure. Again, Nirav, hyper-personalization seems to be a big theme for Ignosis, whether it's nudges, fraud detection, or income verification. Could you share how this translates into a better experience for the end customer?
Sure. So I'll give you a couple of examples.
Hmm.
Imagine you have a rent payment coming up, but you're short on your in your bank account. You're short on the cash, right? Like, so a nudge can go out probably a couple of days before, reminding you of top up the account before a rent payment hits, or a bank can offer you a pre-approved loan to cover that upcoming rent expense. So that's one example. The other example could be you're spending on medical bills, hospital bills, but you don't have an health insurance, right? So a bank can avail you a health insurance catered to your own need. So there are a lot of such examples where a very personalized, hyper-personalized, real-time, contextual nudges
Okay.
can be given to you, which will help eventually improve your financial health
All right.
and
Nirav,
access.
let's get to the fundraise. With this fresh capital, what are your immediate priorities? Where will we see Ignosis double down in the next 12 to 18 months?
Sure. So definitely a lot more focused on our AI product roadmap and hiring for product and engineering roles, expansion of our enterprise sales and customer success team, and also double down on our governance, compliance, and infosec processes.
All right, regulatory alignment is critical in financial services, Nirav. You're building on RBI's account aggregator framework and the DPDP Act, like you mentioned earlier. How challenging has it been to balance innovation with compliance?
Look, RBI and the regulators of India has been extremely progressive, and that has really helped us, solve identity through other payments via UPI. And I think with account aggregator and combination of Ignosis AI-driven intelligence, we are very bullish on solving for 300 million underserved Indians with access to credit, investment, and insurance.
All right, on that note, Nirav, I'll have to wrap up our conversation. But many thanks for joining us on Startup Street today and wish you the very best with all your growth plans.
Thanks a lot, Shruti. Thanks for having me.
Moving on, Ember, which claims to be India's first 100% non-toxic, non-stick cookware brand, has raised $3.2 million in seed funding. The round, backed by HNIs, family offices and marquee investors, will help Ember scale R&D, deepen manufacturing and build India's first innovation lab. Adding more star power, chef and entrepreneur Saranj Goyla joins as investor and partner, bringing his culinary expertise to shape product design and consumer education. Joining me now to discuss this further is Himanshi Tandon, the co-founder and CMO of Ember Cookware. Himanshi, thank you so much for taking time out and being here with us on Startup Street. You are a cookware brand. If you could sort of talk to us about what made you start, this journey, what was the gap that you were trying to address in this market, especially since cookware has, traditionally been a low innovation category in India, right? So what makes you confident Ember can lead and even redefine it in a sense?
Firstly, thank you for having me here. I think for us, with my own personal health journey, where I was making all the healthier choices, whether it was the cold pressed oils or the organic masalas and veggies and everything else, given my own allergies, I think what I realized was that a lot of toxins enter our bodies through the cookware, the products in the kitchens, the microplastics, etc., etc. And I think that is where we realize that there is a need for 100% non-toxic products for the kitchen, but they also need to be easier to use. They also need to be accessible, and overall, when you want to drive a movement, it also means that you need to make the products more desirable. It needs to fit into your lifestyle. So we always say, at Ember, that we work hard so that the products and the consumer doesn't have to. So our products need to work much harder. And I think when we went to consumers and we talked to them, the ones who were aware of the problem also, they were not able to make the shift. Because when you gravitate towards products like stainless steel, cast iron, and others, while they are great and non-toxic, not everybody is able to use them. And that's why you tend to go back to your, Teflon coated non-stick product.
Right.
That's where this gap of how do you bring non-toxic together with non-stick, and that's where the idea of Ember came up.
Oh, absolutely. And, you've raised this $3.2 million in seed funding. What will sort of, be your top 3 priorities for deploying this capital? Can you take us through what the fund allocation plan is?
Yeah. So firstly, I think doubling down on what Ember's core is, and our DNA is in R&D. And I think the first and foremost, especially with Saransh also coming on board, and Ember's DNA being in driving innovation that solves for real consumer problems, I think that's the first part of it. So there we plan to use Saransh's expertise in understanding various problems in Indian kitchens, his understanding of Indian cooking styles, and marrying that with our access to global technology, global supply chains, etc., and finding out better, newer products. The second is to drive growth. I think there's been immense love and traction for the brand, but that also means that it's our responsibility to be present closer to the consumer. And that is where expansion in terms of both channels and regions is something that we are undertaking right now. I think the third large part of our investment is going to go into education and really helping consumers deal better with these new material innovations. In India, a lot of traditional cookware, there's a lot of deep understanding, but nobody understands how to use these new material innovations really well. So I think that's, again, a third area of focus. And that is why the Innovation Lab, so that we can test and develop concepts that can go into Indian kitchens.
All right. So a large portion of this going into the Innovation Lab. You are on track to hit a 30 crore rupee ARR within just 12 months of your launch, right? So what's essentially driving this growth and how sustainable is it as you scale?
Great question. So I think firstly, there was a pent-up demand in the market. So I think a large part of our growth is fueled by the fact that people were waiting for this product. They had tried multiple different options. They had burnt their fingers with products that seemed like they were non-toxic, but they were just fake, advertising or just wrong labeling. And that's why they were waiting for a product like that. And I think just the product itself, plus a lot of organic traction that has come from, chefs, celebrities who have been using the product. I think that's gotten the traction. Thirdly, because I think the product looks beautiful. We, again, apart from all the investment that we made into our Ursula coating technology and the thermoclad technology, we also wanted to make sure that while you buy a pretty cookware, it also looks pretty for a really long period of time. And the person on the outside enables that. So as people are spending more and more monies in building their kitchens, they also want the prettier stuff over there. To maintain that momentum, I think what we needed to do was to be closer to the consumer. For example, during the wedding and the gifting season, there was a very strong need from consumers that, we want you to deliver faster to us. That is why we made the switch to quick commerce. And now Ember is present in, Instamart, as well as through a couple of specialty retail like Food Square in Bombay. Yeah, sorry.
Yeah. Also, we're running out of time. So if you could quickly sort of tell us, your products are designed in California, manufactured in Italy, but built for India. So what challenges have you faced in adapting, global design standards to the realities of Indian kitchens? And are there any plans to sort of bring this manufacturing back into India to make for India in India?
Yes. So firstly, to address your first question, the first biggest challenge for us was that Indian cooking is done in a different way and it is diverse. Every few kilometers, you will have a different way of cooking, and even two people cook very differently, right? So understanding of all of those styles and trying to figure out the way we dry roast our masalas or the kind of oils or paste that we use, how do we incorporate for that? The second was price points. great quality ceramic comes at insane price points globally, and the biggest challenge for us was that how do we bring that in Indian households reach. The third was the weight of the cookware. A lot of people in India are not, like especially the women, are not very acceptable to using very heavy cookware. And the fourth was maids. The biggest question that we hear from people is that, can I give this product to my maid because she is cooking or she is cleaning? So I think building for all of those things and those unique things, like for example, ceramics globally were made for induction cooking, but we had to adapt that to stove cooking as well. So a lot of those elements had to go in to make it right for India, especially on the price point. So to answer your second question, yes, I think manufacturing is something that we are very deeply looking at, especially since getting it from Italy, of course, increases the cost for us dramatically, although we've tried not to pass on those costs to consumers and
So
absorb that.
you're still looking at how you can change the manufacturing model at this point in time. All right, Himanshi, we're completely out of time, but thank you so much for joining us here on Startup Street.
For having me. Bye-bye.
Well, moving on. It's Friday and it's time to take stock of all the big deals from the startup world. According to Venture Intelligence, this week saw a total of 11 deals worth $126 million. Some of the big ticket deals include Ayurvedic healthcare brand Kapeva, which attracted $60 million from 361, Vertex and 314 Capital. Meanwhile, luxury watch retailer Art of Time bagged $19.7 million from Plutus Wealth Management and others.
That's not all. This week saw ice cream brand Hoko bagged $13 million from Sauce VC, while B2B debt marketplace Wrecker Club bagged $8 million from the likes of Finvolve, InfoEdge, LC Nuva, Physis Capital, and String Ventures. AI startup Assessly got $5 million from Foxhawk Ventures. According to Venture Intelligence, this year has seen a total of 696 deals worth $6.5 billion.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
Hello, check 1 2 3 1 2 3.
बोर्ड लगा हुआ है ऑस्ट्रिच जी का बोर्ड लगा हुआ है ठीक है
मेरे पास EP है, I can hear you. So I'll just request you to say 1 2 3 again.
1 2 3 check.
Does that work?
Welcome back. You're still with us on Startup Street. Let's go across to my colleague Ashmit Kumar, who has the Meity Secretary with him to talk about the latest draft online gaming rules and more.
Right, Arundhati, thanks a lot for that. Joining me now is with us Mr. S. Krishnan, Secretary of Ministry of Electronics and IT. Mr. Krishnan, thank you so much for joining us, being a part of this conversation. You've given us two big headlines in the scope of just 24 hours. First, we had the ECMS, a stellar response to that. Investment proposals worth 1.15 lakh crore rupees. Then later, last evening, we also had the draft rules coming out for online gaming. A lot of questions that need answering. I'll come to you first on the issue of online gaming. I just want to get a sense. We saw a rapid pace with which it went through the parliament, and since then, at least from what the language of the draft rule is, that it is yet to be notified, the government is consulting all the stakeholders, there seems to be an intent towards staggered implementation. Can you help us understand that?
No, I don't think it's right to say that there should be staggered implementation. I think the intent of the government is very clear, and that has been expressed in the form of the legislation that got passed. Now, legislation goes through Parliament at a rapid pace, and that depends on the parliamentary schedule and so on. And we've brought out the rules also in fairly quick time. And based on the industry requests and demands, because we have been meeting industry post the legislation being passed and looking to see what their concerns are. Most of them, I think practically the entire industry, has accepted the spirit of the legislation and stopped offering many of the online money games as defined in the Act. Now, the question is, in the rules, we have certain processes which have been prescribed and procedures which have been prescribed. So we want to give industry enough time to respond to what has been said there. And the rules themselves are not very complicated, fairly straightforward. One aspect which I'd like to highlight is that the registration of an online social game is voluntary. It is not obligatory for somebody who's offering an online social game to register that particular game. What this implies is that any small game which somebody is innovating, putting together, offering, or something which is purely educational, none of those which clearly fit the definition of the online social game as per the Act has to be registered.
Sure.
They can choose not to register it. They're confident that they're not going to be called into question, and they can defend their position that they are a legitimate game. They don't have to offer themselves for registration. Sure. This is, in my view, a major ease of doing business measure and should really enthuse innovators and startups. I think that is an important point that I would like to make. The second point is that there is a prescribed process by which the online money games, there's a determination of what is an online money game or a social game or an e-sport. There's a process which has been prescribed. We want to get the entire process started quickly. So rather than trying to set up an entire new board and the usual teething troubles and the usual starting trouble that we have with a new organization being established, to avoid a lot of that, the organization has been kept lean. It has been kept something which can be up and running from day one, and that is how it has been.